What's going on, everybody? Tiger here. Sorry, I got to get my little fatigue mat over here I can stand on. That way it's a little more comfortable. Yeah. Like I said, what's up? Happy Friday. Just wanted to give you a quick update on what I've been doing this week. I placed two trades, one on gold and one on the New Zealand dollar, Canada dollar currency pairs. So I want to show you why I got into gold. And then kind of talk about it because it didn't end the way I wanted it to, and that's on me, and I'll show why. So this will be one of those few videos that you see on YouTube where a trader actually criticizes his own stuff, right? Usually when you get on YouTube, you see people flaunting all their winning trades, but you never hear about the losses, right? Well, that's not going to teach anybody anything. So my thinking is, and obviously, having said that, I did have a loss on gold. My New Zealand dollar, Canada dollar trade is still going. I'll get to that one later. But I just thought it'd be important to talk about the loss that I had so that we can learn a little bit from it. So, number one, I talked just a week and a half ago on my technical analysis video, which you can find, of course, in my playlist, uh, Tiger Trading Project. All right, youtube.com/@ Tiger Trading Project. Real simple to find. But you'll see on there quite a bit of stuff I talked about on technical analysis. And one of those things was trading low on the curve. Okay, if you're placing a buy order, or short selling high on the curve if you're wanting price to go down. Well, guess what? Not even a week and a half later, I broke my own rule. So that's on me. I want to show you what I did, and hopefully we can all learn something from this. So when it comes to gold, I mean, if you go back in time, as you can see, and this is a daily chart. So each one of those candles, whether it's red or green, that's one day's worth of price action, one day's worth of trading range within that day. So going all the way back multiple months, I mean, this thing's just been going up like crazy. And I think I found basically from February of last year, yeah, right around in here, right around in this point, because it went sideways for a while, but since that point right there, it's just been going up like crazy. And then really over the last 2 or 3 weeks, it's just went parabolic. Now, you could say it went parabolic since about right here in this point, just up, little retracement, up, bigger retracement, and then straight up. So what I wanted to do was try to find a place to get into that. Now, I tried to do it a few weeks ago where this green rectangle is. That's a demand zone, but as I've explained before, I like to find daily demand zones, and I like to try to find a 4-hour demand zone within that daily demand zone for confluence. So that's what I typically like to do. That's going to go a long way for me specifically to finding a grade A trade. Now, I'll still place trades in different places if I don't have everything match up, but I'll just drop my risk, right? So what I was trying to do was get in here. Now, right there in that spot. Now, it wasn't a daily demand zone. In fact, I didn't even have a 4-hour demand zone. But if I go down to 2-hour time frame, then I'll go back to that same point in time, and I'll show you what I was looking at. So here's that spot right here. And there's another trade I placed even before that where I bought down here and I sold up here for a nice profit. So that was a good one that did work out for me back in mid-February. So but anyway, yeah, I was looking in this area. Now, why did I like this area? Well, a couple things. It wasn't, number one, it was not the greatest of demand zones on a 2-hour or even if I went down to a 1-hour. But what I liked about this area is the fact that price still did just go straight up. I mean, really hardcore, right? It did that on high volume, as you can see the volume bar right down there. If you look straight down and straight down from that candle, high volume. So that's a good thing. What else can I find to give me some odds enhancers? Well, if you look back, this right here became a double top. It became a, what the hell just happened? Oh, okay. It was a double top back here further time, and that was a resistance point. So what happens oftentimes is resistance, whenever it finally gets broken like it did right above that zone, it often becomes support. Okay, resistance often becomes support and vice versa. Support often becomes resistance. So as you can see, price came down and that resistance point then turned into a support point, and from there price just skyrocketed. Well, a lot of people are support and resistance traders, and a lot of people place trades right there, and a lot of them probably made a good chunk of change on that. But I like I don't like to trade off of just strictly support and resistance. I like supply and demand zones. Why? Because supply and demand zones represent points in time where price was, for that time being, that short period of time, in equilibrium. The buyers and sellers agreed, okay? They were just butting heads, and then all of a sudden, at some point, the buyers are going to win out, or the sellers are going to win out, price will go down. So I was waiting on the area right below that would be support zone, support line. Okay, so you talk about the NFL being a game of inches. Well, sometimes trading's a game of inches, but more like millimeters. So as you can see, price did come down at that point back in April 7th, and it touched the support line. It became support, and it just barely missed my demand zone where I had a limit order ready to go. Okay. I was ready to place that buy order. Well, yeah, and if I zoom in, I mean, you can see how close it got. I mean, it got within about, I think, 10 or 20, yeah, about 10 or 15 pips. Okay. XAU USD pips. So works a little different, but still pips. Got real close but no cigar. Close is only close, and horseshoes and hand grenades, right? Not in trading. So clearly I missed out on my trade. So this is something to keep in mind, is a lot of times that'll happen to traders, and then they'll want a revenge trade. They'll want to chase it as price starts going up like this, up and up. They'll just place a market order to try to ride that wave. Well, the worst thing possible, and I guarantee you a lot of people did that right in here, because they were waiting, especially the institutional traders and retail traders that know a thing or two about supply and demand. A lot of them, I don't want to say so much the institutional traders, but I guarantee you a lot of retail traders started hitting the buy button, even though, price was way above their order area. So the worst thing possible is for them to have done that and actually made money. Why? Because it's chasing. It's called FOMO. It's FOMO trading, fear of missing out, FOMO. Especially having this resistance point right here. Well, anyway, price just blew through that and I missed my trade. No big deal. I just wash my hands and I go find another setup. There's plenty of setups that happen all the time. So I thought, well, how can I get into that trade? Because as you can see, it just went parabolic. And I'm going to go back to a daily time frame here. So down here's where I missed my trade. Now, as price made this big parabolic move, I just had been waiting patiently. I'm like, I need a place to enter. I need a place to enter. The first chance I finally saw where I might have a shot at getting in this trade was this red candle right here. Okay, that's the last down candle before the next big move. In fact, it gapped up. Okay, that's a strong gap. A Sunday gap. Is that Sunday? Yeah, Sunday, Monday. And so so I thought, okay, well, let's just put a rectangle around this down candle like that. Let's stick a stop loss below it, like I did, that red line. Let's put my Fibonacci lines on here so I can see if I can get a pullback to the 38.2 area, which I did. And then my next thing to check off was, okay, do I have a 4-hour demand zone? So let's take a look. Let's go down to a 4-hour zone, 4-hour time frame. And I didn't really have a 4-hour demand zone. So I need a big red candle. Well, I need a red candle down, and then I need the next candle to go way up. I need to have a little bit of a fair value gap in between there. Rule number 1 that I broke. Okay, so it's safe to say I had a little bit of FOMO. I'm like, I need to get in this trade. So another thing that I had working for me that I kind of liked was, let me see here. On the 4-hour time frame, when I went to place that order, it was on this green candle right here. You can see by my green triangle. So when I got into this trade, I recognized, okay, price retraced down to my demand zone, and then it created a big wick. So price at one point came down here. So price opened on the bottom of the green body, the real body. They call it the real body. Price went down, but then sharply spiked. The buyers said, nah, B, we want to go up. So My issue that I did was I got in right before this candle closed. So it was close enough to the end of that 4 hour time frame where I knew it was going to be closing very, very bullish. Well, what's wrong with that? Well, what's wrong with it is I got in I got in 17 minutes before that candle closed. I should have waited till that candle closed and then bought on this candle when if and when it would have spiked higher than that high of that 4 hour candle. So what I should have done is basically gotten into that trade, right about here. Right about there. That's where I should have gotten in. But I pulled the trigger about 15 minutes too early, just assuming, that candle's going to close. And the next candle, normally 9 times out of 10, when a candle closes that strong, the next candle usually opens up at least higher than that candle. So I thought, well, I'm on my way. Well, the buyers they didn't have enough mustard to get out of there. It didn't come down to my 38.2 level, as you can see, and then that next candle just opened up and went straight down, and it blew out my stop loss. Not a huge deal, tiny loss. I think it was about a $987 loss. It's small relative to the size of the account I've got. So as you can see, $247,000 account. Now this is my demo account. Keep that in mind. I'm trying to pass phase 1 so I can get funded. But anyway, that was my fault. I should have waited till that next candle opened up and went higher, but I didn't. So I took a loss on that. All right, no big deal. I'm human. But at the same time, about 5 to 10 minutes after I placed this trade, I got into one for New Zealand Canada dollar, which let me go find and open that one up real quick. New Zealand Canada dollar, there it is. So this is the trade I've got going right now. So if I go to my daily time frame, there's the demand zone candle that I looked for, had a gap up for the Sunday open, similar to the gold trade that I showed you a minute ago. And then I wanted price to come down, touch, and then go up. So I did notice that I had a resistance point right here, further back in the past. Price went down, came up, and then tried to resist right here. As you can see, the wicks on the above side of those candles, but ultimately it did go through, and then it wicked right through that former resistance and turned it into support for this time being because it closed well above it. Came down, danced around sideways right around that support and resistance line, because at this point it's been both. You see the candle going through, gets rejected, candle goes through, rejected, candle goes through, rejected. So that's a pretty decent, interesting point in time. Well, price ultimately fell, as you can see. This is back when the tariff stuff started going on. And then it came back up and it started dancing again around that resistance point at this point. Okay. In the context of that, this daily red candle was formed, and then price gapped up. So that should, in theory, mean that that's now a support zone, a support line again, right? So daily demand zone candle. Let's go to 4 hour. Okay, here's my area. So that's my 4 hour demand zone candle. I had 1, 2, 3 candles, base and candles. If you remember from my scoring system, 1 to 3 candles is great. 4 to 6 candles is good, and anything over 6 candles it's just too much price spent at that zone, right? For there to be that many leftover limit orders or people wanting to place market orders, in theory. So we had a leg in, we had the base and candles, and then the leg out. So that was a pretty strong zone. Now, what I would like to have seen, what I would have liked to have seen is that price to go above this area over here, to break that area. But again, I was like, I haven't placed a trade in a week and a half, and I just wanted to place a trade. So anyway, I got into that one after it came back down and touched the zone, and it didn't get down to my 38 level. That's technically another rule I broke on this one, on this trade as well, but I just did it. I'm placing small amounts, small risk. So yes, ideally I want everything to line up. we always want a perfect trade. We want all of our parameters to line up. But listen, sometimes trades will run off and leave you. That gold trade I showed earlier, that first time I missed it, it came down. It did touch the support line. It didn't hit my demand zone, but it still flew. So, sometimes trading is just about taking risks. I mean, it's all about taking risks, but even if not everything matches up, it's not ideal, especially if you're a newer person, but I've been around long enough to see these things. I just felt pretty confident that it would make a run, and it didn't. It didn't for the gold. So anyway, yeah, as far as this trade, the New Zealand Canada dollar, I went ahead and I bought right here, had a pretty good move up, and then created what's called double top. So we had a top right here, we had a top here, and then even recently we've had a third top. So we've now got a triple top. Here's the one reason I'm staying in this trade. I mean, as of right now, you can see it's only $327 in profit right over here. But what I like is this horizontal line or diagonal line. Okay, we had a low point. Price shot up through that demand zone. We had another low point, but this was a higher low point than this one. Okay, price shot up from there, came down. We created another low, which was higher than the. So basically, it's higher lows. Okay, there's a low, there's a higher low, there's a higher low, and now we're trying to form another low. So as long as this low point, which you can see that wick, and it got close to my entry point, but as long as that does not wick down through this low, then I'll be confident to stay in this trade even over the weekend and see how it opens up on Monday. One thing that did not go in my favor for this trade is today's Canada dollar retail sales numbers. So as you can see, they had pretty decent retail numbers. So the core retail sales, I mean, they had the previous number was 0.1% increase, 0.1%. And then they projected to be less. So they projected to be negative 0.1. Well, the reality was it was actually a 0.5 increase, which was bigger than both of those numbers. So that's good for the Canada dollar, but bad for my trade because I'm taking the other side of the Canada dollar. I'm trying to buy New Zealand dollars and sell Canada dollars. So that right there did not do me any justice. Okay, and then as you can see, the retail sales number, that came out right on forecast, so that didn't really affect it. But if I do get closed out of this trade, whether the end of this trading day or Sunday when the market opens, or even Monday when all the volume comes in, it won't be a huge surprise because I know that Canada number was good. Okay, so anyway, once that number came out, it actually dropped the New Zealand dollar Canada dollar right here down below my 5 threshold. It made it a score of a 4. So 5 or higher is a bullish number for that instrument, and that's an instrument worth looking for a place on a chart to place a buy or a sell order. Well, a buy order in these cases because it's bullish, and then if you go to the bearish side, it's anything that's -5 or less. So, and Euro Pound actually just climbed onto the list just recently, I see. So I'll be taking a look at that one. So anyway, just because I'm in the trade, when I got in this trade, it was giving me a score of a 7. Okay, so if I just go to the EF score history there and I type in New Zealand Canada dollar, you'll see what I'm talking about here. New Zealand Canada dollar. So this is the history. So as you can see, the last couple of weeks was giving me 7s and 6s and 5s. So it's been bullish ever since April 15th, so 10 days. But like I said, today after that Canada retail sales number came out supporting the Canada dollar, that actually makes it not good for the pair on the long side, New Zealand Canada. So what I want to see is good news for New Zealand dollar. I want to see negative news for the Canada dollar. Okay, that's the thinking behind this specific trade. So anyway, I say all that to say, just because it's dropped to a 4 doesn't mean I'm going to prematurely get out of the position, because as you can see, it has been a fairly strong uptrend over the last 3 weeks. And then I am still getting the higher lows. So I do like that. Yes, I have a triple top, but basically what it's forming is what's called an ascending triangle, or pennant, ascending pennant. So the theory behind this is as price contracts and contracts and gets smaller and smaller, there's a lot of pressure building up. So price, after it breaks out of either this diagonal, what you could say dynamic support, okay, it could fly downwards and there'll be a lot of short sellers piling on, and then it would go against me and close me out for a small loss. Conversely, if it breaks out above this triple top, then there's going to be a lot of buyers stepping in. So ultimately, what I would want to see is something like this. I mean, I want to see price bounce from where it's at, and I want to see it come through and close, because usually when that happens, we'll get a retracement back to the former resistance that is now becoming support again, and then we should see a bounce and then a continuation upwards. So that's ultimately what I'm looking at for this trade. There's about half an hour before the market closes today. It'll open back up 4 p.m. Central Time on Sunday. And then, as far as next week's news, if I'm looking at now Aussie dollar, Australian dollar, obviously they're neighbors with New Zealand. So sometimes good news for the Australian dollar will help the New Zealand dollar as well. So the only thing I've got on tap is Tuesday. We got the inflation numbers coming out for Australia, as you can see here. Okay, the CPI report, quarter over quarter, year over year. And it's, as of right this moment, it's trending, or I should say it's forecasted an improved consumer price index score, which is good for the currency, but negative towards the stock market. Okay, it's an inverse relationship. So as long as it holds to that number, 0.8 for the quarter over quarter, and then that might help. Now, at the same time, we got the year over year that's projected to go lower than the previous month. So if that happens, then yeah, I mean, it's basically you got the same report. It's just depending on the quarter or the year, however you look at it. But what I want to see ultimately is that those numbers to be high. So it's projected 0.8. I would like to see 0.9 or even 1% or higher. Same thing with the year over year. Okay, it's projected 2.3. I'd like to see 2.4, 2.5 or higher, because Australia dollar and New Zealand dollar typically work in tandem. So even though this is specifically for Australia dollar, it should give some good vibes to the New Zealand dollar, which would aid my trade and help it to go up. So we'll see how that works out. Other than that, we got Canada dollar GDP report coming out on Wednesday, and I think that was basically about it. We got retail sales for Australian dollar on Thursday, but that's more of a medium impact. And then parliamentary elections on Friday as well for Australian dollars. So like I said, it's not directly the New Zealand dollar, but those two countries are tied fairly close. Kind of like Canada, kind of like what's good for the U.S. and Canada might kind of affect each other to a small extent, right? Because we're neighbors. So anyway, that's basically it. We'll just see how this trade looks. I mean, like I said, at this point, it's up to the chart. It's up to the market. It's up to the market. But I'll be happy to just sit in this position, and let's see what it does on Sunday when the market opens up, 4 p.m. Central Time. So, moral to this video: don't break your rules. All right. So do as I say, not as I do. How many people you gonna find on YouTube that are gonna call themselves out like I did? So there you go. I feel like that's a good teacher. When you make a mistake, you own up to it, because that should help other people maybe own up to their mistakes. And there's a lot of mistakes to be made in trading. Being honest does go a long way, and I just thought that might help. So other than that, hey, I'm out. Have a wonderful weekend. We'll talk to you soon, okay?